Welcome back to another video, guys. Today we're going to be talking about an SKX, otherwise known as Skechers, trade recap over earnings and how you can actually profit over earnings safely. If you're new to the channel, my name's Kyle and this is Opinicus Holdings. Without any further ado, let's get to it. What's up, guys? Welcome to the trade recap. Wanted to talk about SKX. Skechers is the company, SKX is the ticker symbol, and I wanted to talk about their earnings and how we played their earnings, what the data that we looked at, and how we were actually able to profit. Now, earnings is usually pretty consistent with this theory that it is gambling when you trade over earnings. However, there are certain things you can look at that will slant the odds in your favor. And one of those things that we look at is historical earnings data. So you see here, I'm looking at the Traders Think Tank that we offer. One of the tools that we offer within the Traders Think Tank is the historical earnings data that you see here, this little screenshot here. So basically what we're looking at, I forgot to include the key on this screenshot, unfortunately, but I'll just tell you what we're looking at here. We're looking at historical data for earnings on SKX. Now this yellow line here, it's telling us the average historical move that SKX sees over earnings. So this is from the close of the day that they report to the next day. This is the average that you'll see, and that average is 11%. Of course, you see some areas where it's been way higher. The average move, or the individual move, was up to 30% here on this particular earnings in 2015. The move here in 2017 was up to 40%. The little blue bar that we see shows the implied move. So that is, if you're unfamiliar with options implied move over earnings, I recommend looking it up. Basically, that's what options writers are pricing in. That's what they expect the move to be in the underlying. How this is determined, I'm not going to go into that right now, but we're just going to see that this is the data we have available. The implied move on this particular day, when it saw that 40% gain, was very minimal. It was about a 10% move. So people were expecting the stock to move 10% over earnings. It moved 40%. So this blue line that's kind of hiding behind the yellow line, that's the average options implied move at 11.37%. The current implied move for this particular play, we were looking at 15%. So if you have an implied move of current implied move of 15%, your average historical move is 11% in this particular case. Now the odds here are a little unfavorable because you want the average, the historical average move, to be greater than whatever the current implied move is. What that's going to do is that's going to allow you to not get hit so hard by the implied volatility crush after the company reports earnings. Now I'm not going to get into IV crush or implied volatility crush in this video. That is a whole different topic, but if you're already familiar with this, you'll know what I'm talking about. What I saw on this chart that made me want to play earnings was the average, the historical average move of 11%. So what I'm looking at with earnings, this is personally, is a minimum of 10% as an average move. Why 10%? Well, when you straddle a stock with options, that means you buy the same expiry, same strike, call and put. You want at least a 10% move in the underlying to cover the losing leg of the straddle. Now this takes the guesswork out of determining, oh, is it going to move up? Is it going to move down? You don't have to guess. You don't have to gamble. You know that the stock is going to move big based on the average, based on the historical data, and so you just straddle it. This is how we were able to take a 60% gain on this stock. So you see, I bought in, I posted this in here. I said it would likely be a good play. I posted this data right here is showing the last earnings for July 20th. This was the earnings day. It shows the price of the straddles. And mind you, this is looking at monthlies, not weeklies. So you can see that it dropped pretty significantly. And then we have more data here. Kind of spiked up and then dropped. And so I just supplied all the data for the members to determine if they wanted to make the trade or not. On this particular earnings, earlier in the year, we can see the date up here, 4/19/2018. We had a massive gain in the price of the straddle. So on this particular play, let's see, did I post my entry here? Yes, I entered the July 20th expiry 32 strike straddle at 475. So what I want to show you now is I am having some trouble with on demand. I actually wanted to show you this trade as a recap, a true trade recap, but as you can see, my on demand was not loading properly. So what I can do, yeah, I couldn't get any of the options to load properly. So I said I bought the 32. What I'll do is I'll copy this code for the 32 and we can just look at it in real time here and see what the price change was actually. So fortunately I can't do that on demand trade, but we've got to work with what we're given here. So I bought at 475 like I said. Yes, bought the 32 strike straddle at 475 for my ER play. We can see this is the day I bought it. 475 is right there. If you look on the far right, you'll see the price axis. That's 475 for the straddle. I could have gotten a way better price, obviously, but I sold the next day right at the open. I think I sold for just shy of 8. Could have gotten a little better fill, but can't complain about that. Let's see, did I post in here what I got on it? Yeah, I sold it at 7.9 for 65% return on investment. And guys, I was just using this data that I posted up right here. We do it all the time over earnings. Post up all the data. This earnings season alone, I've traded 5 winners and 1 loser just based on this data, nothing else. All pretty much, I mean, Skechers is not a big name in the stock market. All pretty much, you know, kind of lower name, not huge popular stocks like you're used to hearing about over earnings. Just I'm going purely off of data. This is how you can win playing earnings. Now, again, it's not going to be a 100% thing for you. You're not going to make a winner every single time. And so if you have a scenario where the stock opens relatively flat, or you don't see that average move that you're expecting, like if Skechers had not moved more than 11%, likely the trade would have been a loser. To what degree? It's kind of hard to say. Depends on what expiry you went with. I just kind of wanted to show you guys the value of having this data and what it can mean to you for playing earnings. Hope you guys enjoyed this video. If you learned anything new, please hit the like button. Please subscribe. Helps the channel grow and gets this video to more people like you. Thank you so much for watching, and we will see you in the next one.